can't get their money out.
This video is...
Today we're talking about a bank promoted by you. About a bank. Can't get their money out.
This video is...
Today we're talking about a bank promoted by YouTubers that's now become a casino and users can't get their money out.
This video is sponsored by Yotta Savings.
Yotta, Y-O-T-T-A.
Yotta Savings?
The Yotta Savings app, maybe you saw a couple people talk about this.
Yes, I have seen people talk about Yotta recently.
Hey, my name's Daniel. My wife and I, our family has 18,000
Oh my lord.
in Yotta that we can't get out.
Over $60,000 frozen up in Yotta.
$15,440.06 frozen in Yotta.
$7,270.60 frozen.
$583.
$98,000 frozen in Yotta.
$94,000, give or take, frozen.
$46,699.
Yeah, it's a disaster, and we're gonna break down what happened. Let's.
Yikes. I mean, part of me, I'm a little empathetic for some of these people for sure, but unless you're able to have that investment 2 times over, or like a time and a half over, realistically, maybe even realistically 2 times over, I don't think you should be trying to be investing in something this risque. You'd be much safer getting yourself into a mutual fund, maybe doing the S&P 500, and then just running your own Robinhood, and then running your own, if you really want to dabble into some Bitcoin, get like a Coinbase or, you know, whatever kind of exchange you would want to go on, and then go off that and manage it yourself. Doing these YouTubers, the projects, I just have not seen anything good come out of them.
Let's start with the basics. A few years ago, Yotta Savings advertised itself as a no-lose lottery through YouTubers, where you'd get a lottery ticket by saving money rather than spending it. It's called gamified savings, and some took it beyond a sponsorship and bought equity in the company because they liked the idea that much. The most viral example of this was Graham Stephan, who claimed that I bought a bank.
I decided to invest an undisclosed amount, and now I can officially say I am a small owner in Yotta Bank.
Now these videos are deleted, as Yotta has become more than a harmless savings app, and users can't get their money out. But to understand what exactly happened, let's first go back to when they demanded an apology from me back in 2022. They made a brief appearance in a video called The Most Evil Business in the World, and for some reason they didn't like the cameo. They said, quote, "Given these false claims, we would like you to issue a statement in a video clarifying that your claim that Yotta is a scam is false and misleading." Now, I never said that exactly.
Pause. Sorry to pause you right there, and that's a little rude, but raise your hand here if you actually watched Stephen Graham's video and you were aware of, like, him investing in this. That was me. But I didn't see his previous video on that, you know, nice little cameo, a little shout out that they got in his previous video, he being CoffeeZilla.
So I didn't apologize, but I found the next bit a bit more baffling. They tell me, quote, "You could also conduct an interview with Adam Moelis, the co-founder and CEO of Yotta, if you wish," which I found odd. Either way, I decided to today take them up on their offer.
He was going to say 1 or 2 things right there, a little cut. Continue on.
Years later, when I checked back in on Yotta and found customers' accounts have been frozen and their website looked more like a casino than a no-lose lottery. On their app, Yotta now offers roulette, dice, blackjack that you can lose money on. Now, honestly, I was shocked by this. This is the same company that's saying play the no-lose lottery, regular lotteries are scams, they prey on innocent people. Now they're offering gambling. So, of course, I reached out to the CEO, and he told me Yotta is not actually gambling. Quote, "We decided to pivot the business into sweepstakes earlier this year. Sweepstakes is not gambling. We worked extensively with lawyers."
I think whenever you're mixing card games, dice games, it's going to roll or fall into the world of gambling.
In the space to build out the program. Now, I don't know which lawyer told Yotta blackjack isn't gambling, but it's time to get your money back. All Yotta is really doing is running a loophole. The CEO says you can't actually buy Yotta Cash, but this is a very sneaky claim, because one way to get Yotta Cash is by purchasing tokens on the app. These tokens are pointless, except that they come with free Yotta Cash. Spend $10, get 13 free Yotta Cash to gamble with. The more you spend, the more free Yada Cash you get. It's really just a stupid loophole to claim that this is all a sweepstakes and that blackjack, dice, and roulette are somehow not gambling, which is of course ridiculous. But most interesting, I think, is the admission from the Yada CEO that, quote, yes, this is at odds with the initial mission to encourage savings. The savings-based business model wasn't working, so we decided to pivot. But pivot to what? To the exact thing your system was designed to fight, stupid lotteries that waste people's money, and you pivot to just getting people hooked on actual gambling? Is that it? It's like me starting a methadone clinic only to pivot to selling heroin because that's where the real money is. It's utterly...
I mean, that just seems like a good business strategy, you know? You want to go where the money's at.
ridiculous, and I told their CEO...
I'm just kidding.
...as much.
No, I'm not. It sounds like a great business model. Methadone to heroin? I mean, get out on the streets. Come on, kid. Now you're learning. Now you open up your mind.
And to my surprise, he responded asking me for help. Quote, you can make your own moral judgment of whatever you want. That's fine. But the...
Yeah, you can make your own moral judgment. If I want to make money selling the heroin version of the product, you can use your own moral judgment. That's fine. I'm going to use mine. I see no issues.
The issue that matters is that our customers haven't been able to access their funds for nearly 3 weeks. I think you can help. And honestly, he's right. I do want to help Yada's customers not getting their money, but I can't ignore that Yada is a savings app that became a casino, the exact thing they were fighting, and that's disgusting. 2, YouTubers brought people into a financial product that is now broken, and rather than address it, most of them have gone radio silent. Some are deleting their original videos. Now, of course, most of these YouTubers who promoted it had no idea Yada was going to pivot from savings to gambling, or that users' accounts would be frozen. But this is all the more reason that YouTubers should not be getting in the business of promoting financial products, especially finance YouTubers. I've spoken to a lot of these people. They all tell me the same thing. Oh, I feel so bad. It's not my fault. I had no idea. And
I didn't know it's not my fault. I mean, if you're out there investing in it, you gotta do your own due diligence. I feel like there has to be a little accountability at least.
that's all fine, but when people bring up your name as an explicit reason they got into this savings account, it starts to ring a lot more hollow.
So my brother actually told me about it. I'm pretty sure he found it through the Graham video.
That would have been Graham Stephan.
Yeah, that's the guy who I watch.
That's the Graham video.
Graham Stephan's.
Graham Stephan video.
Graham.
I know he's in a little bit of a limelight, but he puts out some good content. Graham Stephan puts out good financial content. He may be under some hot light right now or in some hot water, but he still puts out good content.
Stephan came out with a video.
Graham Stephan, Andre Jek, guys that I like as, financial YouTubers.
Yeah, this is the reason I hold financial YouTubers to a higher standard. Overwhelmingly, I find them to be more influential. Although, I have to say again, I don't hold them or anyone else personally responsible. I hold them all irresponsible for promoting financial products. This is not like promoting Dollar Shave Club, where people get a product and that's it. If the company goes bust, it doesn't matter. Financial products are different. You are asking people to put their money somewhere. If in 5 years that goes bust, people are going to remember you advertised it to them. And if you're uncomfortable with that, if you think your bank might blow up in 5 years, don't promote it. Shill a VPN and have a nice day. But if you insist on telling people the best place to put their money, you better not be upset when they listen. By the way, as I was editing this video, someone released a podcast
Actually, kind of true.
sponsored by, you guessed it, Yada.
This episode is brought to you by Yada.
This is despite the fact that currently withdrawals are frozen. And now I want to pivot myself and talk about frozen funds, which is a huge problem that goes beyond Yada and influencers. Since early May, many fintechs, including Yada and Juno and many others, have had all their user funds frozen. Up to 200,000 accounts are affected, and it's for many reasons that surprised users. See, most people saw these companies like Yada as banks. Remember, Graham Stephan even said, I bought a bank.
Yep.
I just bought a
Yep.
bank.
But this isn't quite accurate. These are fintech companies, not banks. They're not holding anyone's money. They're not FDIC insured. They have a bank they work with that is FDIC insured, and that's where your money is sent to. In this case, the main bank is called Evolve. Normally, this distinction doesn't matter, but when things go wrong, it makes all the difference. So does the distinction that fintech companies like Yada don't work directly with Evolve. They have a middleman called Synapse. And I want you to think of Synapse as an adapter. From old tech to new tech, it's kind of like your iPhone dongle. Remember that? Connecting a lightning cable to a headphone jack? That's Synapse, connecting banks.
I'm with you. I'm with you.
To fintech. And I know I'm not exactly an expert on this, so I brought in someone who is to explain
Who is
what
this
happened,
expert?
because the next part gets kind of confusing.
My name is Jason Mikula. I spent about over a decade in fintech and banking, including
Nice to meet you, Jason.
at Goldman Sachs. So I have some experience in the sector.
What
I like your plants, Jason. I like your cactus.
actually has gone wrong here?
So the sort of proximate cause was on Saturday, May 11th. Synapse, which is this technology middleware provider or banking as a service provider, revoked Evolve Bank's access to what in the court filings is being referred to as the dashboard, which is basically Synapse's IT systems, including actual ledger information. And so when Synapse revoked access to that information on Saturday, May 11th, Evolve functionally froze all of those programs by ceasing to process payments. So Evolve.
Well, that is an issue. I'm still here. I'm just watching a YouTube video, just content.
Evolve's decision to respond to Synapse revoking that access is what led to users being unable to access their funds beginning on May 11th and continuing through to the present.
People are saying, oh, it's FDIC insured. Why isn't that working?
So basically, you had two groups, Group A, Group B, or really Group C, and there was a third person. This would be Group B. Group B had to seize the operations of moving the money from C to A, and during this course, people who were wanting to withdraw the money out from A just couldn't. And this is so synonymous to during the banking issue where SVB's Silicon Valley Bank, where people were trying to withdraw their money, but they couldn't because the bank didn't actually have enough money on hand. And then what happened? The bank wound up having to be bought out because it got itself in a pickle. And in a situation like this, I just have a feeling that this scam, all the people who put their money in, unfortunately, are just going to be out of their money. And this person, whoever is running behind this, running behind all of this, is unfortunately probably just going to have to wash his hands over or her hands over and start over.
Okay. Yeah, so it is. End users' confusion is entirely understandable, right? One of the great successes of the American banking sector and American banking regulation is that you, generally speaking, don't have to worry about whether or not your money is safe. However,
generally speaking,
that in this case, and it's not the only case, has engendered some confusion for end users who see FDIC insured and read that as, this is safe. My money's safe. I'm going to get my money back.
That is definitely not always the case. 9 out of 10 times. But the 1 out of the 10 time, ooh, that's annoying.
Now, what is FDIC insurance and what does it do? It protects depositors and users in the event that a bank fails. A bank has not failed here, and so there is no direct role for the FDIC to step in. If Evolve had failed, the FDIC would step in, seize the bank, and sort of figure out the next steps. That's obviously not what's unfolding here.
Right. So if you have money frozen, it is FDIC insured from a bank failure. But in this case, banks haven't failed. It's the in-between layer that has, meaning your funds are stuck until this is fixed. But it's not exactly clear when that will be because Evolve and Synapse can't agree on who owes what. The founder of Synapse says it's all in Evolve's control. We are doing everything we can to release funds. Meanwhile, Evolve says Synapse's records are wrong. Quote, recent ledgers and data do not align with the actual movement of funds in and out of Evolve. Basically, someone is lying. Or even worse, doesn't know what the truth is, and this isn't a disagreement about a few pennies. It's $150 million being argued about. But according to new reporting from The Information, such discrepancies were known about for at least 2 years before the revoked dashboard and Synapse's bankruptcy, meaning this could have been avoided, but it wasn't, leaving a bankruptcy trustee to pick up the pieces and hundreds of thousands of accounts frozen. And we don't know who owes who what or when we'll find out. But all I have to say is, who cares? People need their money back. They were told these fintech programs were safe, now they're stuck. Look, after talking to the people affected, I get it. Banking is complicated, especially as I spoke to Jason, that became super clear. But historically, this hasn't stopped us from helping the elite when complex banking problems come up. Remember Silicon Valley Bank? And look, I know it's a different story, but back then we moved heaven and earth to make sure startup founders got their money back beyond the FDIC insurance limit. Out of concern for the rich and powerful, we bent the rules. And all I'm saying is, I get that this is also not a traditional FDIC insurance case. But dare I say we give regular Americans the same level of urgency and empathy we gave to Silicon Valley founders when we decided to bend the rules for them. It's been 3 weeks with no end in sight, and these people have mortgages to pay, taxes, bills, and quibbling about the middleman or the bank whose fault it is to miss the point. Trust me, there's plenty of blame to go around in this story. But for the immediate future, let's focus on getting these people their money back before they're punished for something that isn't their fault. Because time is of the essence. Even if these people eventually get their money back, the win matters just as much, as people with frozen accounts told me.
I mean, it means everything to me. I wasn't able to pay rent for this month. I wasn't able to pay my bills.
I quit my job. I quit my career to go into business for my family, and my savings is my safety net for doing that, for making such a crazy decision. So it means a lot.
We really have no safety net. I mean, even if that money's not gone, it's gone for us for now.
This is where I just like, man, you cannot take that much of a gamble on something this risky. If you have the opportunity to have this much money, put it in a safe investment, and then use those dividends to then pay for these riskier investments. That way, if the money's gone, you still have your asset. You still have your golden nugget. You're just not giving your golden nugget out to the thing that promises the highest ROI, but is a little risky because you got to risk it for the biscuit. I mean, don't you want to be successful? You think successful people only make 5% a year? No, they go for the double-digit returns year over year over year. True, but they have capital, they have assets in their back pocket to make sure that if they lose out on one of these things, it's not killing their whole bank, it's not their whole life savings. I think that's the biggest difference here.
My wife and I have been saving for our first home. If this takes months, years to drag out, it's going to delay our home.
I've been saving essentially for 3 to 4 years, and was saving up for a wedding and to buy a home. And as soon as this stuff happened, that was actually the first week that I needed to pay off the deposits for the wedding. So it hurt me quite a lot.
Damn. I hate to see people lose out.